Welcome to the tokenized economy. Here is today's explainer on the regulation pivot. We've all been watching tokenization grow and evolve across the financial system for a while now. But as we get into this next really critical phase of adoption, one thing is becoming crystal clear.
For years, the whole conversation was about the tech. Could we even build it? Was the blockchain fast enough? Was it secure enough? Well, we've hit an inflection point. The technology, it works. It's been proven. So the real hurdle to scaling tokenization has completely shifted. The biggest challenges aren't in the code anymore. They're in the legal and regulatory rulebooks.
And make no mistake, this is not some far-off futuristic concept we're talking about. Tokenization has already broken out of the lab. It is live, right now, in the market being used for real-world assets today.
What's pretty amazing here is just how broad the implementation is. We're seeing it everywhere. It's in the absolute bedrock of finance, right? We've got tokenized bonds and repo markets, those critical hubs for institutional lending. We're also seeing these really innovative new things like tokenized funds and private credit. And of course, all of this is built on foundational layers like stablecoins. And we're even seeing the first tokenized equities start to take shape.
And this isn't some niche thing happening on the sidelines. No way. This whole wave is being pushed forward by the absolute core of the financial system. We're talking global banks, major asset managers, and the big infrastructure providers that are the backbone of capital markets. These are the players who are actively building and rolling out these new systems. So the big takeaway here is just undeniable. There is real momentum. The gears of the financial system are already turning, and tokenization is fitting itself right into the existing machinery. Which brings us to a really crucial point about how finance is different. See, unlike a lot of other tech industries, you can't just build a better mousetrap in finance and expect everyone to use it. Financial markets run on a foundation that technology, by itself, simply cannot create.
Just having a cool piece of tech is not enough to move trillions of dollars. What really allows finance to scale is legal certainty. It's knowing, without a shadow of a doubt, that your ownership rights can be enforced. It's having super clearly defined roles for every single person involved. And, critically, it's having regulators recognize the entire market structure.
This quote just nails it. It's this whole framework of law and trust, not just the technology, that lets the global financial system operate at such an insane scale every single day. Trust is really the ultimate currency here, and it's built on these legal and regulatory pillars.
So what happens when we introduce tokenization? Well, we're adding this new digital layer that immediately brings up some huge, fundamental questions. And probably the most important one is this: what does owning this token actually mean in the eyes of the law? The tech can create the token, sure, but it can't give it legal standing.
And this opens up a whole host of really critical design questions. If there's a problem, which record is the real source of truth? The unchangeable blockchain or the traditional company books? How do you actually protect and enforce an investor's rights in this new on-chain world? What happens to the jobs of custodians and transfer agents? And how do you make sure that important stuff like compliance checks are still being met on-chain?
And that right there gets to the absolute heart of it. These aren't just bugs you can fix with a quick software update. These are deeply complex legal and regulatory puzzles that have to be solved with really careful policy and framework design.
So, because of all these massive questions, we're seeing a huge shift happen. For the longest time, regulators were mostly just on the sidelines, watching. Well, that era is over. They are now actively stepping onto the field to shape the future of this entire market.
And you can see this happening all over the world. In the US, regulators are getting really specific, making these important distinctions between different kinds of tokens. Over in Europe, you've got massive frameworks like MiCA, the Markets in Crypto Assets Regulation, that are creating clear rules of the road. And really, the global focus is tightening on securities, on stablecoins, and on how all this new infrastructure is going to plug into the existing system.
The transition really couldn't be any clearer. We have moved decisively from a phase of passive experimentation to one of active regulatory engagement. And that changes everything for the people building and investing in this space. This is actually a much deeper transition than it might seem. You see, the first phase was all infrastructure-led. It was driven by the tech guys and the early adopter financial firms who were just building the pipes. But from here on out, the future is going to be regulation-shaped. The winners will be the ones whose models actually work under the new legal definitions and can scale inside these compliance frameworks.
So this brings us to our final, and honestly, our most important point. What is it going to take to finally unlock the full potential of tokenization and get to true global scale? Well, the answer is one word: alignment.
Let's be really clear about the new path to success. It is not about who can build the most technically advanced blockchain. It's not about who can launch the most tokenized products. From here on, success will be decided by who can align with existing legal structures, who can meet tough investor protection rules, and who can satisfy what regulators expect, all while still finding room to innovate.
Okay, so let's do a quick snapshot of where we are right now. We know for a fact tokenization is technically possible. That's a check. We know institutions are already adopting it. Check. But we are not yet at a point of full standardization, and we're definitely not yet at global scale. And the main reason for that is we're still waiting for the regulatory and legal clarity you need to build a single, unified global market.
And look, if there is just one thing to take away from all of this, let it be this. In the world of finance, technology can create incredible new things, but true, game-changing innovation does not scale until it is recognized, defined, and accepted by the law.
Subscribe for more short explainers on blockchain, tokenization, and financial markets. We'd love to hear your thoughts on the future of tokenization regulation, so let us know in the comments. Thanks for watching.